Good morning, everyone. I'll call the meeting to order. My name is Peter Millibar. I'm the MLA for Kamloops Centre and the chair of the Select Standing Committee on Public Accounts. We have two items on today's agenda. The first will be the consideration of the Office of the Auditor General's report titled Beyond the Bottom Line, Navigating the Province of BC's Audited Financial Statements. And this report is in relation to the audit of the province's 23-24 financial statements. Before we get started, though, I will like to take a brief moment to thank our current Acting Auditor General, Sheila Dodds, for the great work you've done in the interim role over the last little while. And note that we have Bridget Parrish here, the incoming Auditor General as well. And we'd also congratulate Bridget on her appointment and look forward to working with you in the future. So for now, I will turn it over to the Acting Auditor General and we'll have questions afterwards.
Good morning. Thank you, Chair, and good morning, members. So the Office of the Auditor General acknowledges that we live and work with gratitude and respect on the traditional territories of Indigenous peoples. And we acknowledge that our office is located on the traditional territories of the Lekwungen peoples, the Songhees, and Esquimalt nations. So government's financial statements are an important link in the essential chain of public accountability. They are the principal means by which the government reports to the Legislative Assembly and to all British Columbians on its stewardship of public funds. The Auditor General Act requires the Auditor General to report annually to the Legislative Assembly on government's financial statements, which is our independent auditor's report. Our independent auditor's report is prepared for and addressed to the Legislative Assembly, and it's published with government's financial statements in the public accounts. And the public accounts are made public by the Minister of Finance. So if the Legislative Assembly is in session, the public accounts will be tabled in the House. Otherwise, they are filed with the Clerk of the Legislative Assembly. And each year, our office has delivered an information report to the Legislative Assembly drawing attention to our financial audit work. So in August of 2025, we delivered an information report on the 23-24 summary financial statements, Beyond the Bottom Line, Navigating the Province of BC's Audited Financial Statements. While the audited summary financials are an extremely important document, they are not easy to understand, even for accountants. They are complex and they are lengthy. Our report on the province's financial statements for the year ended March 31st, 2024 was prepared to assist readers understand the financial information and the results presented, understand the role of our audit in assessing and reporting on the reliability of government's financial statements. And our report also includes an overview of government's financial planning and reporting framework, highlighting how the summary financial statements support transparency and accountability for the use of the public funds that were authorized by the Legislative Assembly through the annual budget process. So today I have three staff with me who are part of the team responsible for preparing this report. As noted, I have Bridget Parrish, the Acting Deputy Auditor General, and Bridget and I will be switching roles December 1st. Very excited to have her starting as the Auditor General. And to Bridget's left, we have Lisa Moore, who is the Assistant Auditor General responsible for our financial audit practice. And to her left, we have Eiling Mao, a director in our financial audit group, who was part of this team. I would also like to acknowledge Shafir Sawilla, a director in financial audit, who was also part of the team for this report. And the report is related to our audit of the summary financial statements, and I would like to acknowledge all of our financial auditors who have contributed in some way to the annual audit of government summary financial statements. And lastly, I wanted to thank the Controller General and her team for working collaboratively with our staff through the annual audit and the preparation of this report. And so with that, I'm going to invite Bridget to walk us through the report on government's 23-24 summary financial statements.
Thank you, Sheila. Good morning, Chair and committee members. So I have the pleasure of walking you through this report, and it is broken down into three chapters. The first chapter looks at the fiscal accountability cycle starting from the budget consultation paper and concluding with the review of government summary financial statements that are contained within the public accounts. The second chapter dives into government's summary financial statements and is designed to help readers navigate this complex accountability document so that they may know how public funds were managed on behalf of taxpayers and how actual results compared to budget. The third chapter provides some information about our audit process and explains the value of the audit. We start by providing some context about the financial accountability cycle. We explain how the provincial budget is created, and how the voted appropriations are designed to permit and restrict government spending on government programs and services. We also highlight how the cycle comes to a close with the preparation of the annual financial statements by government and the publication of those financial statements by the Minister of Finance so that they can be scrutinized by members of the Legislative Assembly and by the public. So it's not the Auditor General's audit that closes the cycle of financial accountability. Our audit is designed to support members of the Legislative Assembly in holding government accountable as they complete their review of those audited financial statements. That's how the cycle of financial accountability comes to a close. We noticed that there is no current parliamentary practice designed to give members of the Legislative Assembly an opportunity to ask questions of the Ministry of Finance about the financial results of the province and how they compare to what was budgeted. Nor is there a mechanism to ask questions of our office about our audit of those financial statements. Although the audit of the summary financial statements is by far the largest audit carried out by our office, our independent audit report does not get referred to this committee. That is because it is not a report that we deliver to the Speaker's office for tabling. Our independent audit is published with the summary financial statements within the public accounts by the Ministry of Finance as required by the Budget Transparency and Accountability Act. This Beyond the Bottom Line report was prepared as a tool to support MLAs in reviewing government's financial statements, which are prepared for them. The presentation of this report to the Select Standing Committee on Public Accounts with witnesses from our office and from the Ministry of Finance provides committee members with an opportunity to ask questions of our office about our audit of the province's financial statements and to ask questions of the Ministry of Finance about the financial results reported in the public accounts. And yet the financial statements can be difficult documents to read, even for accountants. And for this reason, the second chapter of our report is designed to assist would-be readers of the financial statements in navigating the statements. We explain how the three statements of operations, cash flows, and financial position work together to tell a story about the overall financial health of the province. And along the way, we show how to find and use the accompanying note disclosure to help readers take their analysis beyond the bottom line. And in this first Beyond the Bottom Line report, we use government's fiscal 2024 summary financial statements as the basis for our Chapter 2. So if you follow along with me on page 15 of our report, you will find an image that of the government's consolidated statement of operations. And you'll notice in the top corner of the image that we've provided the page number where you can find this statement inside government's public accounts. And in this case, you'll find it on page 42 of the public accounts. And our report starts, of course, with the bottom line, where we note that government reported a $5 billion deficit in 2024. But looking beyond the bottom line, we pointed out that taxation revenue had declined in comparison to the prior year. And we show the reader how to navigate into the depths of the notes to page 84 of the public accounts to find a breakdown of taxation revenue that shows a decrease in both personal and corporate income tax. Now turning to expenses, on page 17 of our report, we show the reader that health and education spending make up the largest share of the expenses, and that they had both increased in comparison to the prior year. We also show the reader how to find information in the notes to the financial statements that categorizes those same expenses, but by type. And we can see that salaries and benefits is the largest expenditure and that it increased 16% in comparison to the prior year. Turning to page 19 of our report, we take the reader through the statement of cash flow. This statement starts again with that bottom line being that $5 billion deficit, and then showing how the statement breaks down and categorizes the different types of cash flows between operating, capital, investment, and financing. And we show the reader that cash flows from operating activities were negative in 2024, meaning that there were insufficient cash flows generated to sustain government operations without either having to borrow or dispose of assets. And logically, we see an increase in cash flows from financing as we see government increase its borrowing. Lastly, on page 21 of our report, we take the reader through the statement of financial position, which might be better known as the province's balance sheet. This statement shows the economic health of the province on March 31st, 2024. We can see that debt has increased, but we can also see that investments in tangible capital assets have increased. And we can see that that year's $5 billion deficit has tipped the province into an accumulated deficit position where previously we could see a surplus. That's at the very bottom of the page. So this brings me to Chapter 3 of our report. Now that we have helped our report readers in navigating the summary financial statements, we want to make sure that they check out our independent auditor's report. That's why our third chapter, we explain our audit process and why it's valuable. Our independent auditor's report will let readers know if there are any aspects of the summary financial statements that are materially misstated, and will give them information to help them adjust their review and analysis of the financial statements. So for fiscal 2024, we reported 2 material misstatements. The first misstatement is the accounting for government transfers originally received for restricted purposes. For example, federal funds received for building a bridge, as an example. So government correctly records these funds as liabilities when they're received. This is accounting that tells the financial statement reader that government has an obligation to fulfill. They need to build that bridge with the funds they've received. However, once the obligation has been fulfilled, the bridge has been built and no further obligations exist, government should be extinguishing that liability. This is where government's accounting diverges from the accounting standards. Instead of extinguishing the liability when no further obligations exist, government instead chooses to slowly extinguish the liability over the life of the asset, the bridge. And this can take 50 years or more, resulting in statements that don't provide a true picture of government's obligations. This type of misstatement has existed within the financial statements since 2012, when the accounting standards were modernized to include government transfer standard. And this misstatement has grown since then. So at March 31st, 2024, the liabilities were overstated by $7.67 billion. The second material misstatement that we reported relates to the omission of information about contractual obligations. Contractual obligations represent costs government has committed to incur in the future by way of signed agreements or contracts. Our audit found $5.7 billion worth of undisclosed contractual obligations. The magnitude of the missing information prevents financial statement users from understanding the nature and extent to which government's future resources are already committed. And we report these types of material misstatements in our independent auditor's report to support readers of the financial statements in carrying out their analysis of the financial statements and their review of the financial statements. So this concludes my presentation. I will now turn it back to Sheila. Thank you.
Thank you, Bridget. And Chair, that concludes our presentation. We welcome questions from the committee after the Ministry of Finance has had an opportunity for their presentation.
Great. All right. And turn it over to Ministry of Finance, I guess.
Thank you. I have a few slides that we have prepared for the committee. My name is Nicole Wright, and I am the Comptroller General for the province of BC. I would like to introduce Doug Scott, Deputy Minister for the Ministry of Finance, who is here with me today. So if we go to slide 2, after the title page, the Budget Transparency and Accountability Act prescribes the rules for preparing and producing the public accounts. Government summary financial statements are prepared based on generally accepted accounting principles for senior governments, which in Canada are Canadian Public Sector Accounting Standards. The BTAA assigns the authority to set the accounting policies of government to Treasury Board and authorizes Treasury Board to make regulations that align with existing GAAP. There is one Treasury Board regulation in effect regarding restricted contributions. On slide 3, the OAG's report uses BC's 23-24 public accounts as a reference, and those public accounts were prepared consistently with prior years. The form of the public accounts remained relatively the same as in past years, with some added disclosure on dedicated revenues, which you can see in note 39 on page 89 of the public accounts. And there were no changes in the legislative framework. New accounting standards were implemented during the 23-24 fiscal year related to revenue recognition. So revenues were impacted revenues that impact the timing of recognition to align with performance obligations. So we had to make some small adjustments to things like driver's license and how we accounted for those. Public-private partnerships. So increased disclosure in taxpayer-supported debt, which we included on page 89. And then purchased intangible assets is a new class of capital assets that we included in the public accounts. On slide 4, the audit opinion in 23-24 continued to include the 2 qualifications that Bridget talked about, carrying forward from previous fiscal years: the deferral of restricted contributions and the disclosure of contractual obligations. For the members who have been part of this committee, I'm going to go over this again in terms of the government's position, and it may be repetitive, but for new ones, it's important. So on slide 5, I'll start with the deferral of revenue related to restricted contributions, which has been qualified since 2012. The auditor's report states on page 29 in the last paragraph that these funds are recorded as liabilities when they are first received because government has a responsibility to spend the funds for a restricted purpose. We found government has not been extinguishing these liabilities when the funds have been used for the intended purpose and no further obligations exist. The audit opinion also states that government's method of accounting for contributions is only appropriate in circumstances where the funding meets the definition of a liability. It goes on to say, in my opinion, certain contributions from others do not meet the definition of a liability. So this is really the point on which we differ. Government's position is that a liability still exists after the asset is built. Government has an obligation to provide service over the life of the asset for the purpose the funds were received. Treasury Board has established the accounting policy and issued a regulation under their authority in the BTAA that revenue be recognized as the stipulation to use the asset to provide services is met. This accounting policy is consistent with Canadian public sector accounting standards. The accounting standards for government transfers recognizes that obligations for service delivery can arise from capital grants. Additionally, other provinces like Alberta, Ontario, and Quebec that follow public sector accounting standards like BC also defer restricted contributions. So we are showing that funds provided for restricted purposes are already committed to our future obligation to deliver services over the life of the asset. Turn to slide 6. The second qualification is related to disclosing contractual obligations. Our current disclosure includes significant contracts and agreements. The auditor would like to see additional amounts included that we do not agree meet the requirement for disclosure as contractual obligations. Under Canadian public sector accounting standards, contractual obligations that commit government to make certain expenditures for a considerable period into the future are required to be disclosed, so that financial statement users understand the nature and extent to which government resources are already committed. OAG has requested that we disclose the future payments expected to be made under the First Nations Gaming Revenue Sharing Agreement. Our disclosure does not include amounts collected on behalf of others, whether to First Nations, municipalities, or other organizations, because they do not meet the definition of liability in the standards seen on slide 6. The amounts we collect on their behalf have been conveyed as their right through law and will not be a future liability of government. Additionally, OAG has requested we disclose the future payments expected to be made under the contracts for physician services. Compensation agreements are not included in the disclosure requirements because government ultimately has discretion over the level of service to be provided. Just like union agreements for wages, governments can alter the level of service at any time. That concludes my presentation for this report, and I would be happy to take any questions.
Great, thank you. Any questions? I'll jump in then. So follow the bouncing ball, if you will, on this. I'll try to not get overly confused, and then I'll have a second follow-up. So when I look at the Auditor General report on page 15, we have about an $800 million increase in the projected, what was the projected deficit to what the year-end deficit actually was. And when you look at revenues, despite taxation actually exceeding the projection for the year, we're at about $2 billion more in revenue for the year. So the revenues were higher, yet the deficit still increased by $800 million. So I guess the premise, I'll start with the basis of this is the year before, when there was a massive surplus coming because taxation revenue way exceeded what anyone expected because of COVID projections and all of that, and that happened across the country. And the government was forced to come back with supplementary estimates to be able to expend those extra dollars of revenue. But when I go to page 17, we have, and I would note that with revenues, I fully recognize revenues are projections. It's a lot harder to estimate revenues when you're dealing with commodity prices and global markets and all of that, and taxation estimates and everything. So I get, and I think everyone understands that revenue projections in a provincial budget are going to be, should be the thing that fluctuates the most with variations on what is budgeted for. Yet, on page 17, the expected expenditures were $81 billion, and the actual expenditures were $84.5, which means they overspent, the government overspent by $3.5 billion, but they never came back to the legislature to ask for any permission to do that. Can anyone explain how a government is allowed to by almost 5% exceed its expenditures without any real-time update to the legislature? Now, I recognize this report's coming late because of the election timing, but the next year's report that we're going to deal with later is coming just today as well. It's kind of a little too late for the public to understand what's going on with their finances when we get reports, technically our oversight, this late into the thing. And I'm not saying you have anything to do with timelines. I'm saying that for public awareness, for public scrutiny, I don't understand how we can see year after year, especially with a deficit that's growing higher than projected, expenditures well exceeding what we're expected to be for expenditures. Government ought to, as we just heard, be able to moderate services, moderate contracts, dial things in. That was the premise of the slide 6, yet here it's spend at will, and don't tell anyone you're doing it until a year and a half later. So I need a little help with that, and then I'll follow up with the second piece to that.
Absolutely, I can answer that. So the additional expenditures that get categorized into health, education, and social services are the actual spend. And so some of those expenditures come from contingencies. So this is where we account for what was actually spent. The budget shows what they were actually budgeted for, what they were planned to spend, and there is an amount that we don't know where it's going to end up at the end of the year. And so the contingencies are actually allocated in actuals to where we actually spent the money. And the breakdown of those contingencies is also listed in the public accounts on a separate table, and it shows where that extra spending comes from. If they go above contingencies, that's where the supplementary estimates come in. We have to ask for more money outside of the bucket that we were given.
Okay, and I guess the reason I asked that is because when you were discussing slide 6 and saying, and you used the physicians as an example, the payments, potential payment structure, when you have healthcare going $4 billion more in spending than budgeted for, it seems like there was a whole lot of healthcare spending, and we don't know in real time again, whether that was physician payment or where it went into the abyss of healthcare spending. Is there not is there not been any thought put to getting better line of sight? Because all the great words of transparency and oversight and overview sound wonderful, but the reality is when you're talking $4 billion in expenditure in healthcare, about a 12% difference in what was budgeted for, with no discussion, no scrutiny, no budget estimates discussing that. We weren't discussing in budget estimates a almost $35 billion healthcare budget. We were discussing a $31 billion healthcare budget. These are large order of magnitude swings in what any opposition or the members of the public would reasonably be expected to try to dig into in that transparency piece that's supposed to be budget estimates.
So I can comment on a couple parts of the process. So we have our annual budget process, as you mentioned, where we outline what we think, what we're planning to spend. We also outline the amount that we set aside for contingencies. Those are debated in the House, and you're right, the contingency amount is can be, depending on the year, a significant amount of money. What we do know is that the other part of our process is once the actuals come in and we look at what gets spent out of contingencies and some of the decisions that are made by Cabinet during the year, some of them will be ongoing costs and budgets will be updated. The budget figures will be updated for that planned spending, and some of them are one-time spends for things that come up that are supposed to be hard to plan for. Wildfire season is one of them. We have a certain amount in our base budget, and we have some money tucked away in contingencies to plan for any variation in that. So in this particular year, healthcare was one area where government chose to spend money out of contingencies, and that listing is disclosed in the public accounts.
Okay. Again, I guess, and I know you've all watched budget estimates. As the finance critic, I'm the one that keeps getting asked to ask the questions about contingencies and estimates. And when you ask a question about contingencies, you get no answer on how they're going to be used. So reading from Budget 2024, the contingencies, Budget 2024 includes a contingency vote of $3.9 billion. Oh, sorry, that's 24-25. I gotta find the other page. I'll come back to that. Anyone else with questions? George?
Yeah, I thank you for the presentation by the Auditor General. It's very helpful, your document, and but I still need help to understand, for example, like on page 10, maybe the Controller General could point out. So you basically said the expenses, this is for 24-25 statement. So it's $91 million, and so the category is health, education.
Sorry, George?
Yeah.
Is this question on 24-25?
Yeah.
Yeah, we're on
Oh,
23-24.
you're okay. You're on 24.
Okay.
Yeah.
Kyle?
Thanks very much for the presentations, and just, I know the Comptroller General mentioned, repetitive information, but for a new committee member, it was helpful to get some of these responses. But obviously, some of the Auditor General's findings and misstatements, some of this has been going on a long time. The contractual obligations being one, but the deferral of revenue since 2012. So is there any path for sort of reconciling the differences in the long term over how this is going to be handled? Or is this something that, for the next coming years, this is just going to be carried forward every single year, just to the Comptroller General and the Ministry of Finance?
So because we have a regulation, at this point, it's expected that this will continue. We will continue to account for it this way. However, every year, we have this conversation with the OAG and look for options or opportunities to resolve this. It is an ongoing discussion. There are some key elements that we feel are really important for the public to understand. And if we take 7 point whatever billion dollars into revenue, yeah, it's a great news story for this government. I mean, it wipes out a big portion of our deficit, but what it means is that we're not showing that those funds are actually restricted for future costs coming down for service delivery that we were given that money for. So really, this is a discussion that we continue to have about whether we continue to have an obligation or not.
Okay, and I have 2 follow-ups if that's.
Yeah, I think we just wanted to add.
Sure.
I'm going to turn it to Bridget in a minute, but I just wanted to sort of be clear, like, the legislation requires that the financial statements are prepared according to the public sector accounting standards, that's GAAP. And our audit requires that we audit against that framework. And as the Controller General points out, there's a regulation under the BTAA which is directed to taxpayer-funded government organizations on how they should be accounting for deferred revenues. I would just point out that when those financial statements of those organizations, if there's a material difference between what's required under public sector accounting standards and what the reporting is following the regulation within the BTAA, there will be, there could be a qualification in those statements. And with the organizations, like the private auditors that are appointed to do the audit of those government-funded organizations, what they are providing is what's called a compliance opinion. And they are reporting that the accounting is different from PSAS, but it is in compliance with the framework as defined by this regulation. But when it comes to our audit on the summary financial statements, we are auditing against PSAS. And I'm going to turn it over to Bridget because she'll provide a bit more detail on this.
Yeah, the other thing to note is that that regulation doesn't apply to the summary financial statements. It only applies to those taxpayer-supported government organizations. So it is more of an accounting choice that is based on the definition of a liability and interpreting the definition of a liability and thinking that discretion has been lost when, from our perspective, it has not been lost when the nature of an asset does not lose your discretion. Like once you've built a bridge, using it as a bridge, the fact that it is a bridge does not create a lack of discretion in how you use it. So something that could create a liability, like an example of something that could create a liability, it would have to be something where there would be a legitimate need to repay funds if you didn't adhere to something that is beyond just the nature of the asset. So let's say the federal government gave money and said that this bridge can only be operated for public transit. And we want annual reporting on how many transit users are using this bridge every year. And if you don't meet certain targets, you're going to have to repay some of the money. Now you got a liability. Now you've got something where you have lost discretion. You definitely we would look at that very differently. That type of transaction would be looked at very differently than the ones that we're seeing now, where it's just a straight, you need to use these funds to build this bridge and operate it for its life. But obviously, yes, of course, you're going to operate it for its life, but that doesn't create a lack of discretion that's required to meet that threshold to be considered a liability. So that's where we differ in our opinion. But I would also like to point out that we agree on a lot. So our offices agree on all of the accounting except for, and there's a lot of it that goes on. So we agree on a lot of things. There's just a few sticking points that we're working through. So we're very hopeful that we can kind of reconcile that, but we'll see. And we do have some big changes to the accounting coming forward in the next year or so that will completely change the way the financial statements even look. So that could be an opportunity. We'll see.
George?
It's just a general question regarding audit report. You actually audit according to the act and the procedure, and you don't make any comments on the effectiveness of the procedure.
No, so the financial audit is very much prescribed by our auditing standards, and the wording of the audit report, we're not even allowed to change that. We have sort of a professional responsibility to keep that wording very, very consistent. That's because these auditing standards are used across the globe for entities that are raising funds on public markets. They want to see a very consistent audit report, and we want our audit reports to be able to be used in other countries where we might be raising debt on foreign markets. So we have to make sure that our audit reports are conforming with those requirements. And so to step outside of that would be that would be a separate engagement, a separate audit that we would have to do on effectiveness, which is a separate part of our mandate. Yeah.
Mabel?
Just, thank you. Just in terms of, you referenced, I don't know if it's too early to talk about some changes with respect to auditing practices. Are those just interested in terms of, I don't know if you can speak to it now, or what does that entail? Is it nationally and also internationally, that context? Or what do you expect to impact?
Yeah, the changes are actually not to the auditing, it's to the accounting.
Accounting.
Yes, the accounting. So we have a new conceptual framework. So that's going to be a pretty big one where, and thankfully it is very similar to the current conceptual framework. The concept of assets and liabilities haven't changed. And it is an asset and liability framework, which means we look at those first and the revenues and expenses kind of fall out of it. That's the same as it's always been, but there are some changes to the reporting model itself. So the statements, there's going to be a new type of liability that hasn't existed before. The format of that statement of financial position, that's your balance sheet, that's going to look different. So there's a few changes coming down, and so that's going to create a lot of work for the Controller General's office because they're going to have to create statements based on the current. And then they're going to have to create it based on the new, because we have comparative statements in all of these statements. You're going to have 1 year where you're doing it twice, and we're going to have to audit it twice. So that's going to be a lot of work for both of us, and we're working together to make sure it happens.
And so that's the transition period?
Yes.
And is that nationally informed, or just with respect to,
Absolutely. There's a whole due process involved in setting the public sector accounting standards. That all of these standards go through quite a lengthy process of consultation, exposure drafts that take public input on, how they're shaping up. The Controller General's office has provided their own comments on those, I'm quite certain, on the reporting model, and and so but of course this would go to all sorts of people who use these same standards. It's not just the provinces, it would be all the municipalities, First Nations, the federal government. There's a lot of different people using these accounting standards who also have an opinion, and so the board that sets the standards is looking to serve the public interest as they do that, and they have a whole due process designed to do that. Yeah.
Thank you.
Okay.
Just another follow-up on the incomplete contractual obligations disclosure for the Office of the Auditor General. I do think, it is important for the public to understand which government resources are committed in future years, as the Auditor General's report has noted. We've heard that First Nations revenue sharing agreements were one of the ones risk flag, as well as physician services. Is there an entire full list of these, and could that be tabled for the committee, perhaps?
Yes, there is a list. It is based on our thresholds for auditing. So an audit provides reasonable assurance, not absolute assurance. We don't check every single transaction. So we have sort of thresholds that guide our work. So we can't say that it would be a fulsome list of every single contract that's not included. I'm not sure about whether, I would have to look into our responsibilities in terms of whether we can provide it publicly or whether it could be provided to members. I have to think about that a little bit.
Or whether the Controller General could share the list we've
Yeah,
provided.
that might be.
But can we get back to you on the sharing?
Yeah.
Yes, that would be good. Thank
Okay.
you.
Thank you.
Yeah.
Any other questions on the 23-24? I'll save the rest of my contingency questions for 24, 25. Any others? Do we need a motion to accept it or? No? Okay. So we will move on to our next report, which sounds very similar. Beyond the bottom line, navigating the province of BC's audited financial statements, but this time for 24-25. So once again, we'll hear the presentations and then open it up to questions. And George, you're first on the list. Oh, no, we need the presentation first. Yeah.
Looking forward to the question. Okay, thank you, Chair. As I mentioned previously with the first report, the government's financial statements are the principal means by which government reports the Legislative Assembly and to all British Columbians on its stewardship of public funds. And our office conducts an audit of these financial statements every year as mandated under the Auditor General Act. The purpose of our audit, as Bridget highlighted, is to assess and report on whether the financial statements are true and fair. And my independent auditor's report, which is addressed to the Legislative Assembly, is published along with the summary financial statements in the public accounts each year. And the Minister of Finance released the public accounts for this year in August. Our report on government's 24-25 summary financial statements, Beyond the Bottom Line, Navigating the Province of BC's 24-25 audited financial statements, was tabled 2 months later in October. While the audited summary financial statements are extremely important, as we pointed out, they are complex and can be challenging to understand. And this is the document here. The report was prepared to assist readers understand the key information in the province's summary financial statements and understand how our audit process and independent auditor's report contribute to the reliability of the financial statements. And our report uses the province's 24-25 public accounts as a reference to help readers understand the province's audited financial statements. And so today for this report, I have 3 staff with me who contributed to the report. Again, Bridget Parrish, the Acting Deputy Auditor General, Lisa Moore, to her left, the Assistant Auditor General responsible for our financial audit practice, and Priscilla Lai, a principal with our financial audit team. And I'd also like to acknowledge Teresa Stout, a manager in our financial audit group, who was also part of the team. And again, I'd like to acknowledge all of our financial audit staff who are involved in the work on the audit of the summary financial statements. And my appreciation to Nicole, the Controller General, and her team for working with our staff through both the annual audit and the preparation of this report. So with that, I'm going to pass it to Lisa, who's going to walk you through our report on government's 24-25 summary financial statements.
Thank you, Sheila. Good morning, Chair, Deputy Chair, committee members. Our report on government summary financial statements for the year ended March 31st, 2025 contains 2 main sections, one on the summary financial statements and one on our audit of the financial statements. The first section is designed as a guide to help the readers of the financial statements see beyond the bottom line and understand how actual financial results compare to budgeted amounts and what the most recent statements reveal about the financial results and financial health of the province. The second section of our 2025 report explains the purpose and value of our audit in providing users with assurance about the reliability of the fiscal 2025 financial statements. Starting on page 6 of our report is the section on understanding the summary financial statements. It describes how the financial information is interconnected through the 3 main statements, that being the statement of operations, the statement of cash flow, and the statement of financial position. Moving to page 8 of our report, we provide highlights from government's consolidated statement of operations, which is found on page 42 of the public accounts. This statement shows that expenses outpaced revenue, leading to a $7.3 billion deficit. That is the bottom line for the fiscal 2025. Looking beyond the bottom line, taxation revenue increased by 7%, while natural resources revenue decreased by 23% from the prior year. The 2 largest expenses continue to be health and education at 42% and 21% respectively of the total expenses of $91 billion. A growing portion of the government's revenue was spent on servicing debt in 2025, with interest expense increasing by 29% or $1 billion from the prior year, which is 4% of the related 2025 revenue. This means for every dollar earned by the province, 4 cents compared to 3 cents last year went towards paying interest on debt. Turning to page 12 of our report, we provide highlights from the consolidated statement of cash flow. It starts with the bottom line of the $7.3 billion deficit and then shows how the statement breaks down and categorizes the different types of cash flows between operating, capital, investments, and financing. Cash flows from the operating activities were a negative $5.8 billion in 2025. This meant that government used more cash than it collected and/or generated from annual operations. This means, once again, there were insufficient cash flows generated to sustain government operations without either having to borrow or dispose of assets. You can also see on the statement that more debt was issued to the province than repaid, a 46% increase in borrowing compared to 2024. Moving to page 14 of the report, we present highlights from the Consolidated Statement of Financial Position, also better known as the province's balance sheet. This statement shows the economic health of the province on March 31st, 2025. We can see that cash and cash equivalents increased by 103%, total debt increased by 26%, the investments in tangible capital assets increased by 11%, and the accumulated deficit increased by the $8.4 billion at the bottom of the statement. Starting on page 19 of our report is the section on the importance of our audit. This section explains how the Auditor General's audit provides an independent assessment on whether the province's financial statements are true and fair. Our audit of the summary financial statements was completed on August 1st, 2025, delivering on our commitments as communicated in the approved financial audit coverage plan for fiscal 2025. As our audit process is carried out using a risk-based approach, we focus our resources on areas where the highest risk can be of being materially misstated. An area of audit focus for our 2025 audit summary financial statements was corporate income tax revenue. Estimates of corporate income tax revenues are complex and involve significant judgment. Corporate income tax revenues in 2025 were $8.3 billion compared to $6.1 billion in 2024. This includes a $1.2 billion attributable to fiscal 2024. However, changes in estimates are recorded as they become known. So had it been known in the prior year, the $1.2 billion adjustment being part of the estimate, the corporate and tax revenues would have been a more level amount of $7.3 billion in 2024 and $7.1 billion for 2025. However, they were accounted for correctly based on the standards. In fiscal 2025, our audit identified 3 material misstatements that were not corrected by government. These were reported as qualifications in the Auditor General's Independent Auditor's Report. 2 of those qualifications were cited in the 2024 Beyond the Bottom Line report and relate to the province of the deferral of revenues and how it reports some of its contractual obligations. The 3rd qualification was new this year. It concerned the province's accounting for its share of a court-approved settlement from major Canadian tobacco companies to offset smoking-related health care costs. On March 6, 2025, the Ontario Superior Court of Justice approved the Companies Creditors Arrangement Act plans of arrangement, resolving historic lawsuits against major Canadian tobacco companies. As part of the court-approved resolution, the government of BC will receive $3.5 billion over the next 20 years to recover a portion of incurred smoking-related health care costs. As of March 31st, 2025, the settlement arrangement was binding on all the parties and could no longer be appealed. Because the arrangement was binding and provided the province with rights to a stream of future payments, the settlement met the definition of an asset and should have been recorded in fiscal 2025 financial statements. Given the long-term nature of the flow of the funds, government should have estimated an amount to record in the financial statements taking that into consideration. However, the government did not record an asset or any corresponding revenue in fiscal 2025. Instead, they disclosed the $3.5 billion as a contingent asset in the notes of the financial statements. This treatment resulted in both revenues and assets being understated in 2025. It will also result in an overstatement of revenue in future years when the settlement is recorded. Because there was no amount recorded in fiscal 2025, we determined this was a material misstatement and reported it as a qualification in our independent auditor's report. We report these material misstatements in our independent auditor's report to support the readers of the financial statements in carrying out their financial statement review and analysis. And with that, that concludes my presentation, and I'll turn it back to Sheila for closing remarks. Thank you.
Thank you, Lisa. And Chair, that concludes our presentation. And again, we look forward to questions after the Ministry of Finance has gone through their presentation.
Thank you. So since the content of this report is similar to the previous one but uses BC's 2024-25 public accounts as a reference, I will provide a brief overview of the preparation of the 24-25 public accounts, but I will focus only on the changes that occurred and then open it up for questions. I'm on slide 2. So the Minister of Finance released the 24-25 public accounts on August 7th, 2025. The public accounts were prepared consistently with prior years and followed the same basis of accounting. The form of the public accounts remained the same as previous years, and there were no changes in the legislative framework. And there were no new accounting standards adopted in the year. On to slide 3. The audit opinion in 24-25 includes the 2 qualifications from the previous year and a third new qualification on the accounting treatment of the tobacco settlement, as Lisa just described. The auditor indicated in their opinion that government should have recognized the tobacco settlement as an asset in 24-25. On to slide 4. BC disclosed the tobacco settlement as a contingent asset in the 24-25 public accounts. Government has been involved in litigation against 3 tobacco companies for decades. In previous fiscal years, we had no contingent asset disclosure because confirmation of an asset was not determinable. At March 31st, 2025, the facts supporting this legislation now met the contingent asset criteria, and disclosure was added to Note 27 for 24-25 on page 78 of the public accounts. If you move to slide 5, our difference in opinion with OAG on the accounting treatment for the tobacco settlement is not one on recognition, but on the timing of recognition, i.e., when does an asset exist and when does government control that asset? On March 6, 2025, the court approved a plan to compromise and arrange all claims against the 3 tobacco companies in Canada. That plan is a roadmap to resolving our claim. It is not the resolution itself. The court approved all parties taking a prescribed series of steps that must be taken to get to plan implementation. The plan of compromise is not the confirming event because there are specific conditions that must be fulfilled, not wholly in the government's control, before an implementation date is set, which is the trigger for the province to have claim to payments and before the notice of discontinuance occurs, which ends the litigation. At March 31st, 2025, the plans of compromise were still in progress. Uncertainty still existed on the existence of the asset. On slide 6, we agree with our legal counsel assigned to this case that the plan implementation date, as seen on slide 6, is the binding date based on the terms of the arrangement, specifically defined in section 20.1, the binding effect. It was at the plan implementation date when the obligations and entitlements pursuant to the plans became effective and binding. Plan implementation occurred on August 29th, 2025. And the tobacco settlement will be included in the fiscal results of 25-26. That includes my presentation for this report, and I'm happy to answer any questions.
Great. Okay. George, you want to kick us off?
So on the statement of operations under expenses, we basically have 9 categories, but in the notes on page 85, it further expand on that expense, and that has 6 categories. And they're completely different, of course. They come out to the same number, $91 billion. So how many categories do we use in the government when we expense something? Like that you could actually pull out under different categories, right? Between those 2, there's 9 categories in the statement, but under the notes, it's completely different, right? Except for the interest expense. So how many categories do we have when we actually record an expense for the government so that in the future you could pull it out as different kind of categories? And the second question would be, would the Auditor General be able to do that if they want to look at different expenses?
Do you want me to start?
Yeah.
Okay, you start with the accounting and.
Yeah. So government creates the functional categories like health, education, social services. And we can report on those for the reader's enjoyment to show where our money is going. In the note, we show it on a different breakdown, which we, in our chart of accounts, classified as STOBs or standard objects. So this is where when we record transactions, we record them as revenues or expenses or assets or liabilities. And so from an expense perspective, we can break down how we record all of our transactions into salaries and benefits, government transfers, that match where our budgeted information is broken down. So we can do both things, and we provide that information to the Auditor General's office when they come in and audit this information, so they can see it under either category.
So how many categories do we have? For example, will you have a category for, let's say, purchasing equipment or computers,
Yes.
machinery? You do?
We call those tangible capital assets, and we can break those down by significant types,
Okay. And is that
like
given?
buildings or land or equipment. Yeah.
So does the Auditor General have access to that?
Yes.
Absolutely, yes. And so we will have audited all of the numbers here and the presentation and the statements. But I think, you're looking at you have the voted appropriations. So that you'll identify what that vote is. And then it gets broken down into the supplementary estimates that will categorize the budget for an entity, and it will use the categories that are presented in the note, which Nicole referred to as the standard objects. So it will break it down by salaries and travel and, business expenses, and it all rolls up. So we have access to all of the numbers. We can look at them by entity, by function, by STOB, by appropriation.
Okay. Thank you. Thank you, Chair.
Larry?
Thank you, Chair. And I just want to thank everyone for the incredible amount of work that appears to be done here, so well done. I will freely admit that I do not come from an accounting background, but there was a word or a description that was given during the tobacco accounting discussion. And I'm looking for assistance in how we explain this to the public from a political perspective that is non-accounting background. Material misstatement. How do I explain that? Because this has been a topic of conversation that I've been asked about. How do I explain the meaning of that word in layman's terms to my constituents? Thank you.
Would you like to address that, Bridget?
So for us, a material misstatement is a misstatement that is large enough or important enough that it could change a user's decision-making if they are using these financial statements and they don't have that information or the information is incorrect. So that's our bar for when we add it to our audit report and let someone know, because it's our responsibility to let them know. Now, in relation to this tobacco settlement specifically, the big issue is the timing. It's just the timing of when it's recognized. We actually do agree with the Controller General's accounting. It's just late compared to when we would have expected. We wanted it to be recorded when the asset existed. And from our perspective, it existed at March 31st because having the money in your hands isn't the control. It's the judgment that was issued that gave the control over that asset. So you can think about that similar to if you gave someone a loan. You don't have the cash, somebody else has the cash, and you're going to receive that cash over 20 years' time. You still have an asset, you still have a loan on your balance sheet that you're going to value. And there is going to be a tricky piece of accounting there in terms of what is the value of it if we're only receiving it over 20 years, because it's not worth the whole amount if it's coming so late because of the time value of money. Money in your hands today is worth more than money in your hands 10 years, 20 years from now. So there will be some accounting to do there, which we will be auditing this year when we take a look at what's been recorded by the Controller General at this point to record that asset. And the only difference there in terms of our expectations was that it should have been recorded at 2025, not in 2026.
So may I follow up?
Yes.
My question then would be, what, if any, I don't know if I want to use the word advantage, what would be the differences to government accounting by this discrepancy in timing?
For us, it's a fundamental concept in the accounting is cutoff. The timing of when you recognize something is one of the most important parts of assessing whether the accounting meets the expectations of the accounting standards or not. And so making sure your revenues all are in the year that they should be and not in the next year and not some of next year's into this year's, and same thing with your expenses. Cutoff is a very big piece of our audit work. We focus a lot of our work around, is the cutoff correct? And this is a perfect example of one where we have flagged it as a risk and we looked into it, and from our perspective, it should have been recorded at March 31st. So.
Kyle?
Just following up on MLA Neufeld's questions there on the tobacco material misstatement. So what would be the effect of, so what we've just heard is booking the revenue when it's received is important for a number of reasons, but could the Auditor General's Office explain what it means in these future years for the deficit, for example, if it's done in the way that the government has chosen to here?
So first of all, we haven't seen how the government has done it yet because we haven't audited that yet. So, but my expectation based on early conversations is that it will be recorded based on a best estimate of the total value of the 3.5 billion. And it'll just be recorded in 2026 instead of 2025 fiscal. And then I expect that as information becomes known about the speed at which we're able to collect, right? The speed at which government is able to collect that revenue, that estimate could increase or decrease over time, and you might see some little marginal increases or decreases coming through in the statements in future years as the payments are received, because this particular estimate is based on how profitable those tobacco companies are, and their profits are then going to drive the amount that gets collected in each year. So that's a very difficult estimate to make. But there is a lot of information coming from those tobacco companies that gives the Controller General the ability to make that estimate. But of course, it's going to be adjusted as we go. As we heard, the estimates are adjusted in the year that we know better information, not retroactively. So it won't go back and be adjusted in a previous year. Does that help?
I think that helps.
Okay.
And maybe just a follow-up for the comptroller, is there any sort of current plan on how this will be treated in future years?
So the answer to that question is yes. So when we're dealing with, we will be looking to account for this as expected by the Auditor General. So we will be booking the entire value of the settlement in this fiscal year with some valuation on collectability. So we'll book the revenue and we'll book the receivable. So it'll show up on our balance sheet as an amount that's owed to us by the tobacco companies. So payments in future years will just reduce that receivable. The revenue's done and dealt with this year. So we will take the revenue will offset the deficit, and the accumulated deficit in 1 year, that's it, end of story. So future years' payments just reduce our receivables. There's no extra accounting or revenue changes in future years.
Thank you.
But to expend that revenue this year, you would need to go borrow the money.
If we were going to spend the money, yes.
Okay. Mabel?
So just, I know you covered it in your presentation, but just with respect to the difference in the term material misstatement, the perspective of the Auditor General and Comptroller General. I know you talked about in terms of the timing of that it would be booked. And Comptroller General, can you just reiterate that again in terms of the timing of that and with respect to?
Sure.
Yeah.
So there's two components really that we looked at is the existence of the asset and the certainty of how that asset is and when, and the measurement or the value of the asset. The value of the asset aside, the real question for us was when we're dealing with an asset, you want to be certain, especially one of this size, that it's going to materialize as an asset and government's going to get control of it. The legal advice we received basically told us that there were a number of preconditions that could have, if unresolved, or any one of the three tobacco companies decided to go bankrupt or pull their operations from Canada, could have caused the global settlement to fail. So it wasn't a done deal until August 29th when the preconditions were met. The notice of discontinuance of the litigation was done. This was a decades-long legal settlement. We wanted to be sure that the existence of the asset was going to materialize before we booked $3+ billion into our. So we have the ability under the accounting standards to disclose it as a contingent asset, that it's likely to happen. And we disclosed that it's likely to happen, how much we were planning, we thought we were going to get as a contingent asset. We felt that was in the best interest of the public, and we will book it fully this year.
And just to follow up, and so if I understand, it's basically the settlement has been announced, but you were concerned in terms of due diligence, just to determine that
according
it
to legal,
was,
it was a bit more than due diligence.
Right, yeah.
So there is a plan in place.
Yeah.
They could have appealed the plan.
Right.
And that's the date that the OAG is referencing in March.
Yeah.
They could have appealed that plan. They didn't, right? So as of that March 31st, there was a plan in place to get to a settlement. The binding part of that settlement happened on August 29th. Irrespective of when the first payment came to us, it was about when we were certain we were going to have control of that asset.
And so August 29 was the point of no return, basically,
Pretty
for
much.
the tobacco companies, right?
Thank you, Nicole. I just wanted, the position of our office in reviewing the settlement agreements was that it was binding as of March 31st. There was no opportunity to appeal. And so it was that was the position around implementation of that and having that certainty in August. We weren't talking about the implementation. The accounting standards require that when you have that rate to that asset, and that was confirmed prior to March 31st, it should have been recorded as of March 31st. Thank you.
Thank you.
Stephanie?
Thank you. The tobacco settlement takes up a lot of time. And so my wonder is, and maybe this isn't an appropriate question for these folks, but what did other provinces do?
Yeah, we did take a look at some of the other provinces, and maybe, Lisa, did you want to just speak to that? Because you had, I think we looked, and everybody had recorded something as of March 31st. I don't know if it was the full amount or if they had done different amounts, but there was something recorded in the provinces that we looked at, but there was no other jurisdiction had a qualification related to the tobacco settlement.
So there are 3 provinces that reported before the August 29th date: Alberta, BC, and Saskatchewan. BC reported the upfront payment only. Saskatchewan did do an assessment of the asset, a one-time booking of their settlement at net present value, and then we disclosed it as a contingent asset. So 3 very different accounting treatments. After the August 29th date, half the provinces, Ontario, Manitoba, Yukon, and PEI, have booked the full amount at net present value. And there are 4 other provinces who are only doing upfront annual payments on an annual basis: New Brunswick, Quebec, Nova Scotia, and Newfoundland.
Thank you.
And those would all be at March 31st.
At March 31st.
Yes, because it happened after the date. The certainty was resolved in that case.
So I just want to close on this, and then I'll go back to the contingency. So just to be clear, though, we're in a deficit situation as a province, so booking the revenue all in this year, the only thing that does is it changes the deficit value, because you would have to borrow all the remaining dollars, because you're technically saying you're expending them this year as well, because we're in a deficit. You're not holding any of the future settlement in a trust fund account to kind of sit there and say, oh, next year we're going to use 200 million for this, and the following year we're going to use 200 million for that. We're in a deficit, so by pumping it all onto the revenue side, it's just changing the numbers on the spreadsheet in terms, and you're going to need to borrow to still expend that dollars, because if you didn't book it all as revenue this year, you'd still have to come up with that money for operations.
So if we did accounting based on the cash basis, you'd be correct. We do accrual-based accounting. So when we agree with the Auditor General that when the settlement is done, it is an asset of government, and it's an asset and it's revenue because it's for past expenditures. That we went to, the lawsuit was based on historical healthcare costs, and so the money goes into the Central Revenue Fund to account for past transactions. So yeah, it will ultimately change the accumulated deficit, because it's kind of like a bit of a windfall. We get funds over time though, so it'll show on our balance sheet as outstanding funds that are owed to us, and we could have future valuation changes if the net income of the tobacco companies in future years declines to the point where collectability becomes uncertain, and we may have to write off part of that asset in future years. So it would become an expense at that point. But any planned future cash outputs, it will offset some of the spending that we're doing.
Okay. And just so I'm only on my second cup of coffee, I haven't finished it, so I want to make sure I understood the previous question asked on the last year's report around contingencies. When I asked why there wasn't supplemental estimates when expenditures exceeded by billions of dollars what was projected, the answer back was because it was contingencies being expended, and now they're just being accounted for. Is that correct? So when I look on page 10 of this year's report, when it goes from $89.5 billion to $91.5 billion of expenditures, that's because contingencies are finally being accounted for? Is that, okay, so that's correct. Then I'm very confused then. So, sorry, I just got to call it up here. When I read the budget document for the fiscal that we're talking about, and you go on to page 27, which is the revenue by source page, that says, so page 8 says, $81,523 million. So those numbers match up, and then the actual is, with the audit, is 84 billion. When you look at page 26 on the budget document, which is table 1.3, total expenditures are 89,434 million. And when I look at page 10 on the audit report, 89,434 million. So those numbers match up. The problem is that 89,434 million on table 1.3 in the budget document includes contingencies.
Sorry, which number?
The $89,434 million on page 26 on the budget document that we would be tasked with doing budget estimates around includes contingencies in it as part of the expenditures. Contingencies, general and clean BC, $3.885 billion, and it rolls up into the $89 billion worth of expenditures that are expected. Now, I'm a little confused, and I thought that when I heard the first answer, but it took me a little time to find the other budget documents on my iPad. We're seeing another over expenditure of $2 billion in this fiscal. There was no coming back to the legislature. There were no supplemental estimates. That is $2 billion over and above the $3.885 billion of contingencies that were in the original budget document that we were tasked as a legislature to scrutinize. I fail to understand, and I understand internal transfers. I understand that one ministry might push some money to the other ministry or things of that nature. A little less egregious, but still not proper oversight. When any of my critic colleagues are tasked with scrutinizing a particular ministry, from page 26, if it's agriculture and food, and they are asked to scrutinize the $130 million worth of expenditures that are listed in that budget document, that's what they're being tasked with, not 140, because 10 we don't know about. It's 130, and that's what we're supposed to ask questions about. And in fact, the chairs that sit in this chair shut us down repeatedly if we try to ask questions outside of the so-called scope of the budget. And when we ask questions about contingencies, we get told, well, those are just broad, those are for future use. I fail to understand how this committee, and indeed the opposition, can properly do our jobs if government is allowed to repeatedly spend literally billions of dollars over budget without informing this legislature that they are doing that. So the answer, they were accounting for contingencies, actually, frankly, does not hold up to the numbers on the documents because they are identical, and they are identical with contingencies. They've already been accounted for in the $89,434 million. Page 26. Yet the actual is $91,393 million. We are running record deficits with a government that is overspending its projected expenditures with zero oversight. And frankly, I have not heard there's not one notation of concern by any of the offices up front that are supposed to be scrutinizing these numbers, pointing out that expenditures are not staying within the framework that they've actually been voted for. When can the Auditor General, can the Controller General point to the vote that was held in this legislature for this budget year that we're looking at that said the government can expend $91,393 million?
So I don't have the details at hand, Chair, but we do look at, as part of the audit in looking at expenses, that there is the authority for it. And I believe that there is a contingency vote that's over and above. And that is an area that we have actually identified that we want to pay some attention looking at on what's budgeted and how it's applied to cover expenses during the year. But our purpose really is to audit those statements and provide reliable information to committee members and MLAs to support MLAs in holding government accountable. And so we don't get into the whys and wherefores, but we can tell you that it was that $91 billion that was recorded, and it all reflected amounts spent. That's what the audit's looking at.
But if the audit is not looking at what this building voted to actually allow for expenditures in the year and cross-referencing that, that's like me telling my kid, you got $100 to go out tonight, and they put $1,000 on my credit card and me shrugging.
So we monitor the votes every especially near year end, on a daily basis. And we actually have an accounting in the public accounts and the supplemental estimates by vote. The votes were not overspent in 24-25.
So how do we get budget documents that show us very clearly on page 26 what the expenditures are expected to be budgeted for, with every possible ministry and expenditure under the sun on here? You have Office of the Premier, Agriculture and Food, Attorney General, Children and Family Development, City, you have all the ministries. You then go into management and public funds and debt, contingencies, general and clean BC, pandemic recovery contingencies, which none were in this year, priority spending initiatives and caseload pressures, none for this year but future years, funding for capital expenditures, refundable tax credit transfers, legislative assembly and other appropriations, elimination of transactions between appropriations, prior year liability adjustments, expenses recovered from external entities, funding provided to service delivery agencies, school districts, universities, college and institutes, health authorities and health societies, other service delivery agencies, for total expense. So, like, how is anyone supposed to reasonably track the bouncing ball if what we're being told now is that despite you using the same number to try to balance out in this, your own audit report, you use that exact same dollar figure. You don't use one with other unknown contingencies built into this, or some weird quirk of legislative rules that says they're allowed a certain percentage of contingencies over and above to show us that they're actually still underspent. You are very clearly showing they've overspent by $2 billion.
So to thank you to Sheila for reminding me that our votes are based on the core CRF, it's core government. So those are the number of votes that we have. We consolidate the whole GRE. So it includes things like ICBC, BC Hydro. Those aren't within the vote framework. So those expenditures are all listed and consolidated under a total amount of spend.
Sorry, that still makes no sense of an answer, frankly, because your own document, the Auditor General's document, is comparing the success of expenditures by government to literally the exact same dollars that are rolled up as a total amount. And yes, there's 9 categories here, then 6, it's all the same amount. There's 30 here. But I'm worried about the final number on the bottom of the sheet. And those are all the same. And so that's what we're being asked as a committee, as a public, as a legislature to compare and ask questions about, and estimates and everything else. I understand those other areas are in there, but those other areas aren't broken down in this. And if it was, and all of those other areas are suddenly rolled into this, I'd be shocked if it's only 2 billion over budget, or it should be several billion under budget then. But it's not. We're being asked to compare like for like, with no explanation as to where the extra $2 billion came and why there wasn't supplemental estimates. And when I first asked that question, the answer was because it's an accounting for of the contingencies. But contingencies are in already $89 billion. So forget about budget estimates, forget about everything else. Why there would not be supplemental estimates when the government is overexpending by $2 billion on the exact categories that we're talking about, and the answer back is contingencies, but those are actually in that number. How are we supposed to have any transparency or understanding of what's going on with this government spending if we're being told there'll be no supplemental estimates because the spending is actually contained within contingencies, but in actual fact it's not?
So the supplemental estimates go to voted appropriations for the core government. We recategorize those expenses once they're actually spent into the different categories of health and education. And unfortunately, the view that we're looking at here does include the full GRE, When you look at the revenue side, the revenue includes the full GRE. We do compare it against budget, but we only budget for core government.
Again, I'm truly not trying to be argumentative here, but when I look at the revenue side, which is the very next page in the budget book and the previous page on this, again, comparing like number to like number, in the exact same column of the budget document, it says $81,523,000,000. And on the audit, $81,523,000,000, and then there's adjustments made for more revenues coming in, or less revenues coming in. So I am comparing like for like, and again, I go back to the $89,434,000,000 total already has contingencies allocated for. So whether you move it all into health, or half into health and half into healthcare, anything else like that, it doesn't matter because it's already in the $89 billion. I'm not taking issue with any individual ministry or lumping together of the 9 subsections that on this document you've created, which is a collation of everything on page 26. I agree with you on that. Point being, on page 26, contingencies are already accounted for in that number. So how are we double counting contingencies? How are we enabling $2 billion this year, $3 billion the year before of extra expenditures happening in the backdrop when we already have contingencies that are literally billions of dollars more every year than we used to have? The whole premise of what I'm asking this around is contingencies pre-COVID used to be around $600 to $700 million a year. That was your contingency fund. Now we're into $4 and $5 billion and overspending of expenditures on top of that.
So I will correct my answer. It's not strictly contingencies. Contingencies, you are correct. We reallocate within the existing budgetary framework. The $2 billion you're referencing are expenditures that were consolidated upon the GRE being consolidated with core government.
Yes?
Peter, Chair, just it is the financial accounting and the financial statements themselves, they are complicated. And one of the complicating factors is that the budget process, so all of the estimates, debates, and those voted appropriations, those are done based on the spending that's authorized for core government. And you're looking at by ministry. And as the Comptroller General mentioned, there is vote control that happens. And so that's monitored to ensure that the spending against an appropriation doesn't go over that voted amount. And as the Comptroller General mentioned, that's all disclosed in the public accounts. The difficulty arises is when we're talking about the financial statements that are consolidated and they summarize all of the financial transaction as core government, plus 138 government organizations. And so there's the voted appropriations for core government, and that's where the spending control is. But the summary financial statements, and the government creates a consolidated budget, and that's where those numbers are that are compared to. And so there's a risk of talking about apples and oranges here. I think your question is very valid, and to understand there was a budget, where's the conversation around going beyond that budget, and what was the authority for it? But the control, the spending control that's tracked is at the consolidated revenue fund level.
Well, respectfully, I didn't create the apples and oranges. I'm reading from your own documents. And so why you would insert matching numbers to a budget document and then on actuals add in things that aren't in the other original number makes absolutely no sense. So the $89 billion on your own page 10 directly matches page 26 in the budget document.
We lifted this from the public accounts.
Yet the actual that you're showing on page 10, what I'm now hearing, first I heard it was contingencies, which it's not. Now I'm hearing the variation is some unknown other government entities reporting into what previously wouldn't have been part of a matching document. So either this should be comparing what we saw on page 26 and what the performance of that was, or not. Otherwise, we're not getting a clear representation, so we can have all the bullet points of directing people to this page and that page, which is great, and highlighted boxes. But if your own number set that you're using is two totally different sets of pulling in expenditures from, one being matching up with page 26, one in actual, apparently, what I just heard is a different set of numbers from different agencies being rolled in and collated into that. That's the creation of apples and oranges from the Auditor General's office, not from anyone in this room other than that. I didn't create this report. So how can the public, how can any MLA reasonably figure out what's going on if we're not actually given documents that are then comparing like for like? If it's truly a completely different subset of expenditures, why is that not just in its own box?
I would like to just add a comment that the public accounts are large and they have many different views. We compare numbers, apples and apples. The summary financial statements are prepared in accordance with the Canadian Public Sector Accounting Standards, and they're audited on that basis. And we are required to consolidate all the entities under the control of government. That includes core government, which we have a budget process for, and all of the 138 organizations that government controls that are defined in the public accounts as part of the GRE. We are very transparent about which organizations we're including and which organizations are not included in our financial reporting at the end of the day. We have supplemental unaudited statements that break down the views to help users understand just what you're saying. The voted appropriations against what was actually spent by vote is also listed in the public accounts under the unaudited piece. So we do actually spend quite a bit of time trying to explain these numbers in various different ways. And I think it's good discussion. So happy to help clarify any point of confusion, but I can say that supplemental estimates are only required if we're going to overspend in a vote where we haven't allocated or we've oversubscribed or we've exhausted, I should say, contingencies access.
Okay, I'll probably come back to it, but Stephanie?
Yeah, so I find the tone and the line of questioning here a little problematic because the responsibility of these folks here is to look at the numbers, to look at what we estimated, to look at what we spent. And that's very transparent in these documents. The line of questioning and the concerns are around, where's the gap? And it's around the process between what was estimated and what was spent. And that is not the fault of the people sitting at the other end of this table. And so I want to make sure that we are being respectful to the work that the folks have done and not making accusations about the quality of their work. If we have issues with process, then let's talk about them with the right people. But the quality of work that's been done here is very transparent, and it does allow the public to be able to see the numbers. There was an estimate, and there was a spend, and there sometimes is a difference. But the process there is not the fault of the people who are sitting here, and the quality of their work is, as we can see from these numbers, is high and meets all the various accounting standards. And sometimes there's this misstatement, which is a tension with the general accounting principles and the public sector accounting principles. But I'm finding that the conversation that we're trying to have, that perhaps this isn't the place to have it, and that what we should be focusing on is the numbers in the books.
Well, thank you for that. I am trying to concentrate on the numbers in the books, and I'm trying to understand the books because right now it seems to be not matching up. And I'm trying to find now note 31, which this references back to. And again, the numbers don't match up. When I'm reading the 100 and whatever page financial statement, I guess what I'm asking at its core is we're not being asked on page 10 to compare like for like. The CREs and things of that nature are not on page 20. The only number that matches up to $89,434,000,000 is on page 26 and other expense collations in the budget document for 24-25. That does not contain any of these CREs that may or may not be what has made the differential. And so I can appreciate, Stephanie, that you're not happy with this, but when the first question is asked about the differences on expenditures, we were told it's contingencies. It's not. Now we're hearing it's CREs. And yes, our job, our fundamental job as a Public Accounts Committee is actually to be the line of sight into these numbers and to scrutinize the heck out of them. I'm not calling into question anyone's professional integrity or anything. I'm saying that these do not make it possible for us to do our job properly as a committee of oversight for government expenditures. Now, perhaps the CREs are why we don't need to have supplemental estimates. Fair enough. But why are CREs included in the actual on page 10 when they're not included in the forecast of estimates on page 10? Because that's why we get the apples and oranges. We weren't asked to look at the differential between the page 26 total and CREs on page 10. All we're being told is that there might be CREs, and we don't know for certain that it's the CREs that are the differentials. So I go back to contingencies. Contingencies were actually, I was originally going to ask questions about the ever-growing contingencies and if the Auditor General has concerns or recommendations around that. But based on the answers that I was getting on this, I had to dive into this unexpectedly, which is why I've been trying to pull up other documents to try to, on the fly, get this line of questioning. But does the Controller and the Auditor not understand how, if we're being asked to compare the bottom line of two completely different sets of data, how is that remotely accurate to the reader or the public or anyone as to the fiscal situation of this province and the expenditure control or not of this government? And it's frankly not even fair to the government then.
Well, okay.
Well, you go ahead.
I did, so Chair, we prepared this report to support this committee in looking at the government summary financial statements. They were tabled in the end of August. They are a dense document, and so we have pulled in highlights from pages of the Ministry of Finance's summary financial statements so that there is the opportunity to understand how the statements work together and to be able to look at the results, to look at the bottom line. And the public accounts, the summary financial statements, do present the financial results against the budget. And we don't audit the budget, but that information is in those summary financial statements. So the discussion is important because it's looking at what that bottom line is. The financial statements that we audit do not include comparisons to the authorized budgets, the estimate process. This is what we're focusing on. And I turn to Bridget here.
So first of all, I'd like to thank you for the question because it's a hard question and it's exactly what we wanted, because we wanted this report to generate questions of that nature, exactly that nature, like where things that are going to challenge us. So, and it's a hard question, so we're madly scrambling here going, do you know the answer to this question? And I think we do know the answer to this question. So the Controller General has explained that if we're going to be going out of a voted appropriation, we're going to need to go for a supplementary estimate, and it's going to come and everyone's going to be debating. But that's not the case if it is going to be an entity that has an original budget and they are going to be, carrying out their activities and they're outside of core government. And those results can come back and be different and not require coming back for the supplemental. I believe that is correct. So that's where you're going to see them go and create a variance between what you were involved in voting on and what has actually occurred, because there are a large number of entities that are outside of core government. Your health authorities, for example, like just the island health, I believe, is bigger than all of the core government combined. So, and you've got multiple health authorities. So if we see those health authorities having differences in their amounts, it's not going to be coming through, I believe. Am I correct about this? I hope I'm correct. But I think that would be hopefully an answer that explains it to some extent, but the question helps us know what to be prepared for the next time we do a report like this, which we would hope to do, and how we can best support members with these types of questions. And since this is the first time we've done it, we didn't know what to expect, but I'm very pleased to see the nature of the questions coming so that we know what to do next time to make sure we're ready to help answer.
So just 1 sec, Mabel, and I'm truly not trying to be argumentative. Here is the real world problem. Our job is to highlight what the government is or isn't doing. So I will go out as finance critic and point out, and I have repeatedly, that the government is overspending by $2 billion this year and $3 billion last year. The government's pushback could quite easily be no, and try to bog it down in some accounting quagmire, because I'm using your documents and referencing the Auditor General's documents as to that. And I will point the public to page 10, and anyone that reads page 10, if I referred them to page 26 in the budget and page 10 on this, they would come to the same conclusion I did, that the government has overspent by $2 billion. And so if we're not asked and shown like for like, it makes it pretty hard, and it makes it very easy for either deflection to happen or us being accused of being incorrect or wrong or not knowing what we're talking about or trying to mislead people or anything like that. It makes it easy for us to try to say to the government that they're trying to spin things and they're not being forthright with it. It cuts both ways. So yeah, we need to have accurate like-for-like documentation presented to us. If you had a second box that showed us the $2 billion broken out on its own, great. But that's not what's happened year after year. It is two completely different set of expenditures being slapped up next to each other, according to this answer. And I have no reason to doubt the answer because I have no ability to dive in and take a look right now. And that's part of the problem. Like we can't do our research as an opposition on the fly based on those most current answers. And that is what this committee is supposed to be doing, is digging in and understanding this stuff on behalf of the public. So I'll just leave it at that, and then I'll move on to Mabel, unless you wanted to.
A small bit. As part of the public accounts, there are CRF, or Consolidated Revenue Fund extracts, that are unaudited. So page 122 actually shows the statement of operations just for core government, and it shows that the budgeted amounts just for those votes against the actual amount spent, and it shows that it was not overspent.
Okay. Mabel?
Thank you. Yeah, no, I appreciate the conversation and sorting through all of it, and appreciate that. And maybe if you can just clarify now, with respect to my understanding in terms of our process around the voted appropriation, our estimates in terms of the core government services, and is this correct with respect to the discrepancy in terms of the 89 million to the 91 billion, to the 2 billion, that is the 138. Now, is it GRE, the government, what is it? What's the term? Is it is it a GRF, a government reporting entity, or is it a CRF? I'm just.
You can speak to it. It's
Sorry.
your entity.
Yeah. So the CRF
Yep.
is the Consolidated Revenue Fund.
Revenue fund, okay.
Okay. And the GRE
Yep.
is the government reporting entity.
Yep. Great. And so in terms of the discrepancy that is not included in the numbers with respect to the 138 government reporting entities, that's correct? That's kind of the discrepancy?
Yes.
Okay, and then, so with respect to the 138, those 138 GREs, so that's not included in core government, not included in ministry estimates, is that correct?
Correct.
Yes, so the CRF
Yep.
is core government, like
CRF is
the
core
account-
government.
It's ministries and then some other agencies and bodies, but the core government.
Yeah.
When you're looking at voted appropriations, they're defined for core government. And then from a financial reporting standards requirement, the summary financial statements are required to include the financial results of all of those government entities that are controlled by government. So you have the ministries, core government, and we audit those. And then there are 138, there's health authorities, school districts, universities, colleges, crown corporations. Those entities have their statements audited individually, and we will be here in 2 weeks with our financial audit coverage plan, identifying all of those entities and which ones we will audit and oversee and which ones will have auditors. The results of all of those get consolidated into these financial statements.
And so that's the piece that's the 138.
It's their results, and what you have is there
Yep.
are a lot of, there will be expenses out of the Ministry of Health to health authorities that have to be eliminated when it's consolidated, but there are a lot of transactions between the CRF, core government, and the entities that government controls. And the summary financial statements are the consolidated results, and the Controller General was just pointing to, there is supplementary information in the public accounts specific to the Consolidated Revenue Fund, that core government, because the voted appropriations are set for core government. You'll see a vote matched to a ministry.
And so the separate, the 138 GR is not included in that?
In the CRF, no.
Not in the CRF? And not in the estimates, or?
There is a budget that is prepared that for the government reporting entity, and those budget numbers are what the Ministry of Finance includes in its statements against the actual results. But the appropriations are done for core government.
Thanks.
Kyle, there is another meeting after us, so you'll have to be quick.
I'll try to be quick here. So I do think that these reports on, from the Auditor General's office on helping the public to navigate the province's audited financial statements, I think it's very useful as a summary, so thank you. We've gone through, obviously, 2 different years here, fiscal year 24 and 25. Within the consolidated statement on financial position, we see clearly the debt has increased 20% in fiscal year 2024, and then 26% in fiscal year 25. We see the taxpayer-supported debt-to-revenue ratio in fiscal year 25 was 128%, and that's a notable increase over fiscal year 24 at 101%. I think these are very large increases on likely a historical basis. You can correct me if I'm wrong, over the last 40, 50 years in British Columbia of increase in debt. One thing that was noted is obviously that the audited statements are very important for credit rating agencies to be able to realize what's going on in the province and to provide advice and a determination on the province's credit rating. I'm wondering if the Auditor General's office can just confirm which metrics are most important for credit rating agencies to look at when they're considering a downgrade or not.
Actually, I think the Controller General might be better positioned because I believe credit rating agencies actually have even direct access to information in order to, am I right?
Yeah, so Provincial Treasury Division within the Ministry of Finance spends a lot of time talking with each of the credit rating agencies about their debt portfolio and what they're planning to do in terms of issuing new debt and retiring old debt. So we have a section in the public accounts that is also supplementary information. Some of it's audited, some of it's not. But if you look at the provincial debt summary on page 1, it starts on page 137. My eyes are not what they used to be. Yes, 137. And it gives specific information about how our total provincial debt is broken down, how it reconciles to what we have on the summary financial statements, what it's used for, and we also talk about the different metrics, so debt as a percentage of GDP. We talk about debt service costs as a percentage of revenue, and those are some of the big ones that the rating agencies and the public are most interested in.
Thank you for that. And so we're looking at overall in these audited financial statements, the overall financial health of the province. So with those metrics in mind, what we're seeing in fiscal year 25, and then moving forward, as we look into the future government budget documents, we're seeing debt interest payments are going to reach $7.6 billion by 2027-28. So given what we've read in fiscal year 25 here, and then moving forward, is it the Auditor General's opinion that BC is at risk of a credit rating downgrade?
I would say that that's really not for us to speak to, but we have, we're helping raise the attention of the financial statements that the Ministry of Finance prepares, and we are seeing, ongoing deficits. We're seeing a significant increasing debt, and I think it warrants analysis and discussion around that.
Okay, great. Thank you so much. Any other business? Then motion to adjourn? Okay, we're done.
Good morning, everyone. My name is Amna Shah. I'm the MLA for Surrey City Centre and the Chair of the Select Standing Committee on Private Bills and Private Member Bills and All-Party Committee of the Legislative Assembly. I'd like to acknowledge that we are meeting today on the Legislative Precinct here in Victoria, which is located on the territory of the Lekwungen-speaking peoples, now known as the Songhees and Squamish Nations. At today's meeting, we will hear from the sponsor of Bill M214, Firefighters Health Act, after which we will move in camera to deliberate. But before we do that, could I get a motion to go in camera? All those in favor? Opposed? We are now in camera. Motion carried. All right, we are back in public session. We'll just wait for our presenter to enter the room. All right, welcome. Our presenter today is Misty Van Popta, the sponsor of Bill M214 Firefighters Health Act. Welcome, Misty. As a reminder, you have up to 20 minutes to present to the committee, followed by up to 20 minutes for questions from committee members. Please go ahead whenever you're ready.
Thank you. Well, this is my first time in committee, and I'm very, very grateful for this opportunity to be here to talk about Bill M214. I'm not going to take a ton of time. My intent is just to talk about how I got here, why I got to this bill, and some of the things that the bill is not, and then we'll just go clause by clause through it. So just getting into how Bill 214 came to be, had a lot to do with storytelling, stories within my own community. I know I spoke a bit about it in my debate speeches at first and second reading. And the crux of it is that I had two members within my community, longstanding firefighters, who didn't qualify for early screening with family history of cancer. And just knowing that firefighters have such an increased chance of dying from cancer, I was really, really, really surprised when they came here and advocated after we all got elected to hear that there wasn't actually a plan. I was like, what do you mean there's no health plan for firefighters? And then just even this past Sunday, I saw an article from CTV News. The title of the article is, "He Gave His Life to This Organization, Vancouver Firefighter Who Died of Occupational Cancer Laid to Rest." And, and Captain Neil Austin was 54. I turned 50 in a couple months. I have no problem displaying my age here. It just seems so weird to me that we live in a society where we hail our firefighters as heroes, but we don't have a plan for them to take care of them. And so it was through storytelling and hearing those stories on the ground of kind of the gap that got me to using my time for private members' bill to dedicate it to them. Part of the whys was a personal intentional shift in how I view firefighters and the perspective towards firefighters. It was an internal shift. I was a municipal councillor, and I had been politically aware. I actually ran in 2011 for municipal politics as well. And so I've had this acute awareness of municipal spending and where our budget for property taxes goes and things like that. And so I know most of us as legislators and politicians, we always look at things through a cost-benefit lens. And I kind of got upset with myself last year. And I'm like, this is such the wrong perspective to have towards those whose job is to take care of me. I can't look at them through a lens of cost analysis. We should be doing everything that we can within our powers to take care of them because they take care of our municipalities and our cities and our provinces. And so I wanted to stop saying personally, what do they cost, and start saying, what are they worth? And there's not one person in this room that wouldn't deem the worth of a firefighter as the utmost importance to us. And so for me, it was more about that intentional shift in how I view certain things within a budgetary lenses. My council and part of the work that I did when I was in municipal was in 2.5 years, we actually voted and approved $52 million in investment into our fire department And in the 3 years that I've been elected, I have not had one person ever say to me, oh, that was not a good investment. It's just not something that resonates with the general public because we know it is something that we have to do. It is something that we have to take care of our firefighters so that they take care of us and our municipalities and our province. We have, provincial budgets, we have municipal budgets for maintenance of our bridges and our roads and our parks, but we don't have a maintenance budgets for our firefighters. And that is where I got to this, this shift on how I am moving forward with how I look at them not as a function of our government, but as a function of our communities and as a member of our communities. And just going, sorry, my notes go. I've had a lot of phone calls over the summer and the fall in support of this bill. I have never received one phone call from anybody that's saying this is not a great idea. Again, and it's to come up with a plan and just doing that work. I know we've all got access to, the feedback that did come in. A lot of it was on behalf of organizations. So I think there was about, 10 or 12, but it was, the input is a broader base than just 12, input pieces. And we did receive some feedback into how we can make it even stronger. But what I also wanted to talk a bit about is about what this bill is not. This bill, I heard some commentary in regards to the federal bill C-224, and that this bill is not a repeat or a crossover of that bill. That bill is actually called the Framework for Cancer Research for Firefighters. So the federal bill C-224 is just a framework. It's cancer specific, and it's something that provinces can adopt. I've also heard through the conversations that I've had is that it's not going to be enacted until 2029, and that it's not going to hold a lot of specific information because they didn't want to get into provincial jurisdiction on how provinces implement the framework. So we have an opportunity with Bill 214 to do a more comprehensive health plan. So it's a full health plan. It's not cancer specific, although a big piece of it is to look through that lens. This bill is also not political. It was never meant as some sort of weird wedge politics. Ironically, I am really not that well connected in the labor world. I'm not somebody who's got a lot of contacts in terms of, different groups. And I'm not a healthcare professional. I'm not a healthcare expert. But what I am really good at is hearing conversations, hearing where gaps lie, and trying to be an advocate to fill those gaps. I had no idea at the time when I created this bill of the ripple effect of the attention from across the nation that it actually has garnered. I've been told that there's a lot of people either chiming in right now or that will be tuning in after the meeting is closed to hear what work we're doing on this bill. And it kind of took me a little bit back because, again, I just came from this, Jordan, who I've known since I was 10, and he was 8, was, the president of my fire union. And it's just through conversations with him that this came to be. And so to know that conversations like that create a bill that create a ripple effect across the nation is a little bit overwhelming to think that this work could mean something to a lot of people. I've also been told that it's unprecedented. There's no other jurisdiction that has a health plan in place yet. There's lots of provinces that are looking at it, which is why there's a lot of curiosity right now about what we're going to do with this. And so I think that just because we're the first out of the gate doesn't mean that we're doing something unheard of. It's conversations happening all over North America, actually. And at the end of the day, I reminded myself yesterday, at the end of the day, if this bill is to proceed in whatever format it proceeds, at the end of the day, nobody's going to know who tabled the bill. Nobody's going to know who made amendments to the bill. At the end of the day, if this bill reaches royal assent, what is going to be known is that BC, and everybody in this room, BC is going to be the first to do this work. And so I really encourage all of us to look at it through a nonpartisan lens. I just happen to be the tool that got it here. But at the end of the day, it's all of the work of us in this room that will be known, and it's BC will be the first. And we are all part of that machine. And again, this bill isn't meant to circumvent the work that I know the government's already been doing through the Ministry of Health and through the Ministry of Labour. It's meant to be a complement to the work that's already underway and a way to channel the work and to have a concrete piece of something that comes out of it. It's not just a report. It's not just information. It's not just cancer research. It's taking all of those different pieces together and formulating a plan out of it. And so with that, I'll just briefly go through a little bit of the clauses of the bill. Clause 1 being the definitions. I relied a lot on Susie in legal in terms of encapsulating all the different pieces of legislation and regulation that talk about firefighters and making sure that we haven't inadvertently left any gaps anywhere. The intent was that full-time and paid-on-call firefighters who do this as a full-time career, they have a little bit of a different, their health journey is a little bit different than somebody who's a volunteer in smaller communities, has less exposures. I've had some more conversations in regard to forest firefighters. There might be some room there to adjust the years of cumulative service. Again, a lot of this was placeholder, just wanting to hear the feedback that came in to see how we address some of these items. So again, this is totally meant to be a cooperative process. So I'm really, I've gotten some information on the forest firefighters. In terms of a health screening plan, the big part of this bill is to come up with a comprehensive plan, a health plan in general. Obviously, we all got the same packages and the same briefs. They need a full health plan, not just cancer, but early detection. And again, it comes down to hearing of 54-year-olds, and in my case, somebody who's in their 40s, being, not qualifying for early cancer screening. And so it comes down to a big piece of is finding out early detection of cancer screening, and also just routine, physical exams, regular, something that they can know is going to be a reoccurrence, mental health assessments, all those pieces. Again, something that is a collaborative piece between the fires, the PFFA and the Association of Doctors, and also the Fire Chiefs Association of BC. That would be a piece that I would recommend that we add into that. And then laboratory screening. So again, it's just to come up with a plan. If you're a firefighter, this is the health plan that's put in place for you, and you can guarantee that this is the work that will be ongoing. And then item 3 is the tabling of the plan. So bringing it as soon as practically possible to bring it to the legislative and being reported on. A big piece of this was also to review it every 5 years. And a piece of that is so that, I want to make sure, again, to be preemptively taking care of our firefighters, not making sure that they have to ask for us to take care of them, that it's just inherently here that every 5 years we're going to sit down, we're going to go through new data, we're going to go through new research, and we're going to make sure that the plan is still appropriate. The 5 years correlates to the World Health Organization's review of the International Agency of Research on Cancer. So they have a 5-year review of cancer research every 5 years at the World Health Organization. So the 5-year kind of correlates with that same cycle. And then, you know, in that 5 years, if there's a way to tweak it and make it better, then, you know, it's guaranteed that every 5 years, there's at least lenses being put on it to make sure that it's being reviewed. Going into part 2, the review of the Workers' Compensation Act has to do with the cumulative and presumptive cancers. Again, areas that are placeholders, but we've seen the research. I mean, you can see my visual here on the desk, and that's just a piece of it. This is just summaries of the information that's available, and it's here. It's. I don't think there's anybody in this room that wouldn't agree that early detection of cancers is to the benefit and saves lives, and that really all cancers are applicable. You know, what a fire exposure in one member might manifest different in another member, and so that's why it's important to open up the cancers that are registered. And actually just not pick and choose anymore, and just rely on the IRA's, you know, our IARC's data that, you know, all cancers are at play with firefighters. And so, yes, to review the workers' compensation in regards to the regulations on what cancers and in what years of how many years of service. 2 years has been the recommendation for career firefighters. Full-time paid on call. And again, the other pieces for volunteer placeholders, 5 years, and wildland, I'd like to see that reevaluated to maybe also 5 years is conversations that I've had that has been recommendation. And the other is just kind of general provisions that legal had recommended that are added in there. So I don't have much to say on that piece, but I did want to just really thank you again for getting it to this stage. I was not actually expecting it to get here, and so I do really appreciate the boldness in accepting this, and just knowing that it's good work for all of us to do. And so I'll ask, leave it open to questions now.
Thank you very much for your presentation and for being here today. And I know that we have a few minutes remaining, and so we can carry our conversations to our next meeting. But now I will take any questions that members may have. Mabel.
Yeah, well, thanks for the coming and presenting and putting the bill forward. I think you really reflected all of us. I think all members appreciate firefighters, their service across our communities. And my question was, you referenced your experience as a city councillor, kind of being on the ground, working with firefighters. And in terms of putting your bill together, I know you did a lot of research, but did you also consult with any organizations in terms of informing the content of the bill, and what was the process around that?
The process around that is that I work directly with my union as a member of the greater union. I have direct conversations with the president and stuff like that? No, I didn't, because I also knew that they were doing work, assuming that they were doing work, because they're always doing work with the government. And so I just wanted to take the political kind of piece out of it and just come from the presentation that they had already given to all of us within the chamber, or when we were here, and just really base the bill based on what they presented to us, which is something that was put together on behalf of the full union. And so there wasn't a deviation of information other than a few placeholder pieces like the years of for fire, for wildland and stuff like that. But other than that, no, I work directly with my union on this.
Darlene?
Yeah, you had made reference to the forest firefighters kind of after, because some new stuff came to light. Can you just bring up any of those conversations you had around the forest firefighter piece since your bill has been tabled?
Yeah, so the piece was a couple of the conversations that I've had, and I'm actually still waiting on narrative from legal on this in terms of whether we need to specifically call them out as a participant in in the consultation process, or if they're inherently already included because they are a government agency. And so a piece that I've taken to heart in other bills, talking with the Attorney General, and then also hearing it from our legal team as well, is that sometimes when you're over prescriptive about who's in consultation, you actually inadvertently leave people out. And so if the intent is, because they're already a government agency, that they would be included, but it's one of those pieces, I'm still waiting for the feedback to hear if we need to specifically call out BC wildfire. But that's, again, a piece that I would be more than willing to have called out specifically if it needs it. But if legal's kind of like it's already inherently included, then I wouldn't. In terms of the 5 years, that is a piece that I talked with BC PFFA on, and what their recommendation is. 10 years is obviously because their exposure is more intense. Their seasons are, shorter than a career who's doing it 365 days a year, but their exposure on an event is more intense. And so there is room to have those conversations. And so the recommendation of 5 years was brought in for them.
And you have a follow-up, Darlene?
Just a follow-up, because it says 9 months. Why 9 months upon act of it? Why was that picked?
9 months was because I wanted to make sure that this work was meant to be important, and that there is a gap and that we needed to fill it, and so a sense of urgency. But again, it's a placeholder, and I'm more than willing, if realistically we need more time. I did ask legal a little bit, like what is, the quickest feasibly, and 9 months was recommended. I actually originally said 6 months, and she's like, well, if you're not in session and things like that, it tends to be a little bit. But again, a placeholder that I'm more than willing to be, especially because I did mention that there was another piece of information that I did hear quite a bit through all the feedback, that we could beef this up and make it even better, which is in exposure data collection. And so I think that would be something, especially if we're going to formulate every 5 years new research as a piece to make sure that in every 5 years that we've got current data, and that our plan is good, is that we should be collecting data on exposures, whether it's traumatic exposure or chemical exposure, especially now. New chemicals, EV fires, all of these different things. So if we're collecting data after an incident, then we can start formulating that data into a better plan in every 5 years. And so so the 9 months was, again, I wanted to convey a sense of urgency, but again, not a piece I'm willing to be like, it has to be 9 months. I just think that there is a sense of, 2029 for the cancer piece from the federal framework is too far. If we enacted this, if we tabled this plan and the government chooses to enact it, by 2027, 2028, there is a sense that this could be in place for firefighters. So that was, again, a number that, again, was like, okay, I wanted to convey urgency, but willing to be more than open to adjusting that.
Thank you. So I just want to point out we have about 14 minutes left in the question and answer. We are 1 minute away from adjourning. Gary, would you like to hold your question for next meeting? And Trevor, are you okay with that as well? Okay, so thank you very much, Misty. We will continue our conversation next meeting, and of course we'll welcome you then as well. Thank you for being here. Thank you, members, and I will now ask for a motion to adjourn. All those in favor? Opposed? Carried. The meeting is now adjourned.